Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is September 17th edition of Market Outlook. So, chop around week, slightly or marginally positive close. Let's get into some of the details. We do have some important deterioration in some areas and improvement in others. So let's get into this cross talk between various market indicators and indices. First of all, the thing to note is we had basically sort of a marginal week, and you really have to adjust it for the fact, especially the S&P 500, it closed up 0.04%, but with the dividend payout, it was really up about 0.54%. So you can see marginal upticks in the market. However, what really went on fire was NASDAQ, with Apple really performing well in the face of super demand for their iPhones and obviously affected by the fire on the Samsung competitive phones. So what we also did, we saw some slight improvement in accumulation versus distribution days. You can see things over here in the Russell sort of evened out. You're still under some pretty decent distribution in the S&P and sort of neutral in NASDAQ. So I would call that minor upgrade, and in this particular area on price action, really sort of a neutral considering how strong the move was the prior week. Let's take a look at some of the sectors here and see what that's telling us. Well, one thing that did occur, you did have a downgrade in one of the sectors, and that was the financials. That went into a warning phase. Now, the thing to note is the big leaders this year, right, really went on fire. So technology, led by Apple, really had a superb week, up 4% in the semiconductors plus, and 2.3% in technology. Now, the other thing to note, of course, is that most of the other sectors had either down or pretty meek returns, with one other exception, utilities, and I'm going to get into that a bit later because that, relative to the performance in the underlying index, really is an important thing to note, and I'll get into that in detail. Nothing more to say other than we are trading, virtually all the sectors are trading well above their 200-day moving averages. So that's pretty good, as is the market. Get into more of the price action here as well in a moment. So now let's take a look at market hotspots. Hold on, we just... let's see what we have here. Okay, so market hotspots, sorry for that. Sometimes the mouse has a mind of its own. Okay, so as you can see, another couple of things that are really interesting. Look at sugar. 5-day return, up almost 10%. Look at something else here. UNG, natural gas, up 5.6% in the face of, look what else is going on in the world. Countries, right? A lot of the Eurozone countries, Spain, Germany, Italy, really got hit hard. And currencies as well. So commodities, actually the standout performer among most asset classes. So that's your bigger picture. You did get a correction based on the fact that higher interest rates with pressure on bonds definitely put some additional pressure on what was and is still the hottest overall sector, metals, in 2016. All right, So now let's go to some market internals and see what's happening over there. First of all, as you can see, market internals basically got not to what I would call extremely oversold levels, right? This is the S&P on 5-day up-down volume. You hit sort of the lower band and then bounced up a bit over the last couple days. But look, you've got this breakdown and important support levels were tested numerous times, like 4 or 5 times, holding this critical level down here, just around 212 to 213. So if it takes out these lows here, you definitely want to be cognizant. And I would not be surprised if these market internal indicators, right, the first one here, up-down volume, we got a bounce, but we really haven't moved above the dotted blue line, which is really a sign of renewed strength. Meanwhile, on the McClellan oscillator that looks out a little bit further out over a 1 to 3 week basis, basically got oversold on this bounce, regained a little bit of strength, but we never really got blown out on the advanced declines as well. So what we'd like to see is all 3 of these indicators getting really hit hard and flushed for the rally. But that has not occurred. So we have to really give this sort of a neutral reading for the market internals at this point. And again, critical support level is under the lows put in this week in the S&P. Now, let's take a look at the next chart, which is the NASDAQ composite. Completely different picture. So if you want to understand the complexity here or the diversity, is look, we've well recovered the 50-day moving average and even closed above the 10. So one of the things we do have is an inside day on the composite. So if we break under the 10-day, which coincides with the lows put in on Friday, you would have a breakdown of the 10-day moving average and this short-term trading pattern. That would definitely be an early warning sign that something is wrong. So you've got this divergence between the S&P and the NASDAQ composite. NASDAQ much stronger on the heels of Apple and the technology sector, which is a big component of NASDAQ. So technology, semiconductors, really strong. They've been the leading group. They continue to lead, and that is definitely adding this strength here. So you've got this divergence, and I would say if the strongest index starts falling under that 10-day moving average and the inside day pattern set up on Friday, you can definitely see a sell-off and then an attack of the lows in the S&P. And again, overall, pretty good performance in the market internals on the composite, with the exception of looking out over the longer term, which is the McClellan oscillator. The up-down volume, this top chart here, and the lower chart here are shorter term indicators. You're definitely looking at a bit more positive. You can see they've turned up, both of these, and above their midpoints, and so that's a net positive. However, the McClellan, which looks out a little bit further, still under the midpoint. So I would give this a slight positive along with the position of where it closed on Friday. Okay, so now let's go to our next chart and take a look at this. This is new highs, new lows in NASDAQ, and you can see we fell really hard over the last week. That is not a good sign. We basically had been really cruising up at these levels. We get a little bit lower here, and we've actually generating a sell signal, or the beginning of one. What I like to see is it go from really positive above the 70, where basically it stayed, and then drop down and trade below the that 70% level, and then of course pass through the midpoint. But meanwhile, again, just sort of hanging on here, real erosion. So you could see here some of the market internals definitely eroding. Let's see what NASDAQ has to say. Same picture here. So interestingly, as we're out here making almost new all-time highs, just ticks away, really. The internals of the new high, new low ratio definitely deteriorating, not a good sign. So on balance, these market internals are definitely slanting negative. Okay, let's take a look at some sentiment in terms of the volatility and the VIX. So you can see VIX here for the first time over the last several months. We traded over the 50-day, which is this magenta line here. We moved outside of the Bollinger Bands and the 200-day, but came back in. So basically that sort of neutralized a very strong bearish signal for the market. So moving back under the 200 and back under the Bollinger Bands is pretty positive for the market, with one other caveat. We now are still above the shorter term moving average, the 50-day, which is the first time we've been over that in volatility since Brexit. So I would give this more of a bit of a positive overall for the market because we've worked off that overbought situation. But I'd be really cautious here because we can easily tick back up and basically start a scenario where it starts trending again. So what I give to volatility here, a slight positive, because again, this is all not roses, because we are trading for the first time and consistently over that 50-day moving average. And so there you have that indicator. Let's take a look at another sentiment indicator. And that is the volatility ratio. And you can see that even though the volatility actually eased a bit, right? Volatility came down, positive for the market. Overall moving average is still pointing down. So you could say a reversal here, back up from the midpoint. That's what I would call a mixed signal, maybe a slight positive at best, but we have to be cautious because this can just be a return move. Remember, the trend of the moving averages of this ratio still sloping down, and on a short-term basis moving back up. So this could be simply a return move to this resistance area in here. So I would give this somewhat of a slight positive to more of a neutral. So net, looking at all of the market internals and structure, we're basically slanting a bit more to the negative side, especially with that fresh signal or the fresh sharp declines in the new highs, new lows. Now, the thing that is also quite interesting is an important risk on or risk off indicator, and that is shown right here. Okay, what this is a chart of the utilities versus the S&P on a daily basis. So one of the things I like to look at is if people are running into the S&P, you're going to see this, you're going to see this particular ratio trade in a way that tells you people are running into utilities or favoring utilities over the S&P. So this is the key chart right here. This is the utilities versus the S&P. And you can see for the first time, right, this was Brexit here. And what did it show us? It showed that people were moving into the markets and liquidating their utility stocks, right? Over here, you can see we've sort of bottomed out on this move down in utilities and starting to gain favor relative to the S&P. And moving above that red line, which is the monthly moving average on a daily close, is a real positive. That had not occurred in a while. So net risk off, people moving into utilities relative to the S&P. Now we only have one close here. If on Monday we continue to follow through and stay above this ratio level here, the red line, then I would say that you definitely have a risk-off signal. Now, it's not necessarily a full bona fide sell signal, especially when the S&P is above the 200. But in this particular case, with the market looking so potentially heavy and critical support over the low of the last couple of days really being important, I would take this signal and understand right now this risk-off signal is definitely sounding an alarm. So we're definitely vulnerable here. And as you can see, the situation between the divergence between the S&P and the NASDAQ has to play out. And right now, the evidence looks like you're going to get another test of the lows and a potential sell-off. But we're going to let the market tell us, because we can do all the setups and look at all these numbers, but ultimately price and market action is going to determine what happens. And we know the levels now, and we know that there's a propensity here for a move to the downside based on what we're seeing. All right, stay frosty. We're definitely in interesting times. There's some variables out there that could be a real shock to the market, or in reverse, we definitely have a lot of cash on the sidelines, and that could lend support overall to the market as well. And that's the flip side of this. Cash levels extremely high. So that lends natural support to the market, and that has been a big factor in seemingly rescuing all the down moves recently, especially the short-term thrust has been met with some real support. So it'll be interesting to see how those metrics play out. Thanks, and see you next week.